it's a pleasure to talk to all of you. And it's the 10th year that I'm getting an opportunity to talk to all of you. So I think it's a real enjoyable event for me because Chennai is my hometown. So I always feel that I'm very happy to talk to this audience. Having said that, what I must tell you is that in the last 6 years, we were trying to see how many times I could give a big buy call. And what we realized was the impression that all of you carry is that we are a cautious AMC. And unfortunately, over the last 6 years, when we looked at, and I and my colleague Manish looked at, and found that most of the time we have been giving more cautious views. Maybe 2017 was 1 year where we told people invest in multi-cap and asset allocation. But otherwise, if you looked at 2018, it went back to balanced advantage. And 2019 was again asset allocation and SIP. 2019 was again balanced advantage. And 2020 was a period that was just before COVID, where we again talked about a period of higher volatility. Just before COVID, I remember coming to Mahabalipuram and talking about volatility without knowing that COVID is going to hit. This was in January 2020, if I'm right. And no one could have predicted that there will be such a volatile year. And that call went actually absolutely right. So 2021 was one of the rare years where we actually said you invest convincingly. And that call turned out to be very right, but that was a virtual conference. And it was something that I did from the comfort of my house. And that was one of the rare years where we could give a call which was very positive. And that call also luckily worked. And that was a year where people actually felt quality is the only thing which will work, and we were in the opposite camp. And that call has actually worked very, very well if you looked at the last 2 years. So if you go back to 2022, again it went back to asset allocation, booster STP, conservative debt, equity savings, fund of fund schemes, and again it has worked. So, I mean, keep asking myself along with my sales team and CEO whether being cautious or being conservative is wrong. But the reality is it has not been wrong, because if you look at the last 5-6 years, barring the period just after COVID till 2021, I think most of the time being cautious and investing in asset allocation schemes and following asset allocation has actually worked very, very well. And when the time came to actually invest aggressively, we did launch Business Cycle, ESG, Quant, FlexiCap, because we felt at that point of time there was a huge opportunity, or India opportunities, because we felt that at that point of time there was huge scope to make money, and that call actually worked. So I don't feel regret that people want us to give aggressive buy call, but we did not give because we didn't feel the situation was right. 4 or 5 months back, if people had met us, you would have noticed that we gave actually a very big call on investing aggressively overseas in all the schemes, because it met one of my requirements that many of the global schemes available in India had given minus 40%. And that was for me a big buy call. But no one invested at that point of time. And now they've all recovered and given very good returns. So again, the buy call is no longer as big as what it was. So where are we now? We are again back to a more complex environment. So we said, let's create a checklist for mutual fund distributors and see what checklist can work. Because what my guru, Dr. Atul Gawande, says is, if you can prevent so many accidents as pilots and so many accidents in surgeries, we can definitely prevent accidents for investors. So that's why checklists are useful. So what are the checklists that are useful? It's very simple. Every day, wake up and sell Freedom SIP and Booster STPs. And that will clearly work because both Freedom SIP and Booster STP is something which will actually work very, very well all the time. And you don't need to think whether it is summer, winter, bottom, rains, anything. You can always do it all the time. And this chart which we have published in our fact sheet every month always shows that very, very, very clearly. And so this is something you can do every day without thinking of what we are doing. The second, clearly, if too much returns has come, be very negative. And that is very tough, but that has to be done. Go back to 2007, too much returns had come. And at that point of time, if you had become negative, it would have been very, very positive, very, very good. So a 40% CAGR over 2 to 3 years is a very, very big reason to be negative. And is it easy to be negative then? No, but that is very, very important. So 40% CAGR over 2 to 3 years, 25% CAGR over 5 years. These kind of periods are very, very good times to take out money. No one will tell you from Bombay. No one will tell you from anyone, but you'll have to do it. And that's why you are a mutual fund distributor has a very, very big role to play. Never, ever become obsolete, in my opinion. Whatever people may say, if you are able to take out money with 40% CAGR over 3 years, you will never become obsolete. But that decision, no mutual fund industry will be able to do. No one from Bombay will tell you, but you will have to do it yourself. And that's why mutual fund distributor is here to stay all the time for the next 50 years. The third part would be clearly big negative past returns. So if you go back to 2013, and I know there are so many positive people on small caps here in the audience. So if you see a period like 2013, when you have had 7 years of poor returns in small caps, or 3 years of very poor returns in small caps, investing big money in small caps in 2013 would have been a fantastic decision. And so very, very bad past returns is a big reason to invest very, very big money. When we brought the US Blue Chip Fund in 2012, it was after 12 years of zero returns in US. And it was a fantastic time to invest in US. So what was the amount of money we collected? 75 crores. Whereas people launched in 2021. What was the 10-year return of US? 20% CAGR or something. So people collected 1,000 crores. So what was the return after that? Minus 20. So very big negative return if you get, you should invest in a very, very aggressive way. That is the second, which is very clear. So if you go back to China last year, if you look at the kind of return that people got in China between 2020 and 22, in fact, Hang Seng had touched 2011 in 2022, 22 years of zero return. So that was a sitter to buy. And so if you ask me, very, very big negative returns is another very, very big positive. So if you see 7 years of big negative returns in small cap, 2006 May to 2013 August, so very big reason to big buy in small caps. And on the other hand, if you have very, very big positive returns like 2017 in small caps, 14, 15, 16, 17 was very, very good returns. You have to be very, very, very big negative, which is why Nimish took out, returned all the small cap money in 2018. So very high past returns, take out money, very high negative returns, invest aggressively. That is the second checklist if you ask me. Very, very simple. Difficult to implement, but very, very easy to make money, if you ask me. So what did we do? We found that it's too difficult to implement. So that's why we pushed asset allocation schemes of different types. You know BAF. You know that including gold, we have got asset allocator, fund of fund. You know multi-asset, which we'll talk about. You know passive multi-asset, which no one talks about, but which is a very, very good scheme at this point of time. I think all these things are The best way to do it is asset allocation, because it's impossible for people to invest in 2013 in small cap, impossible to invest in US in 2012. It is too easy to invest in US in 2021. It is too easy to invest in small caps in 2017. So what happens is, that's the reason you have to do asset allocation, because people can't do the right things at the right time. They'll do the wrong things at the wrong time, like invest in infra in 2007. So that's the reason you have to do asset allocation schemes only, like whether it is thematic advantage, whether it is passive strategy, whether it is asset allocator fund of fund, whether it is balanced advantage, whether it is multi-asset. That's the only way to go, in my opinion. The best way to go is, of course, take out money from infra in 2007, put it in value discovery. But those kind of things people don't do. People say they will do, but they don't do. That is my learning after looking at the past. And that has been my experience after being in the 19th year in ICICI Mutual Fund. So that's why we created this entire hybrid product bouquet, and we have been recommending it to people, because people don't do the right things at the right time. They do the wrong things at the wrong time. And so that is why the hybrid product bouquet ensures asset allocation and ensures people do the right things at the right time. And that is why we have been recommending these kind of things, as you know very, very well. In fact, the cheapest way to do it is passive strategy and passive multi-asset, because it is the cheapest way. No one will ever invest in it. And this is my learning after looking at everyone at this point of time. And so where does risk come from for any mutual fund distributor? The biggest risk comes from following one style and investing all the money in one style. When I speak to you in 2023, most of you are aware about it. In 2020, September, if I had spoken about it, no one would have accepted it. But there is a huge risk in following one style, and that one style, if you follow, you actually take very, very big risk. The second, which risk has played to people who have actually done it in direct equity, if you take one single sector, whether it is infra or metals or any single group, that risk also has played out at various points of time. That is another big risk that can play out at any point of time. The third risk, which played out in 2020, March, April, you take high credit risk. And that can also be a risk that people learned in March, April 2020. So this risk, no, you should, if you are managing other people's money, there's no point in taking highest credit risk, highest sector risk, highest conglomerate risk. So when people come and tell me, I'll put all my money in small caps, I tell them that is equal to taking highest credit risk. And why people do it, I don't understand, but that's the way it is. People say, I'm investing for 20 years. I can show you very few people in India invest for 20 years. If you are one of the people who are really looking to invest in for 2043, small caps is great. But how many people are looking at investing till 2043? So that is the whole problem, and it doesn't happen, because before that there'll be a problem in some midway period. At that point of time, people buckle, like what happened in credit. And the same kind of thing will happen in the most unsafe asset classes. And that can happen very, very easily in all the highest risk asset classes. Why FDs have gone from strength to strength, and only because it is a low risk asset class. And that's why when you're in the highest risk asset class, always play more carefully. And that is our learning after working for 33 years. And having been a stockbroker also for 10 years, this is my learning. So best time to invest, fear is high, valuation is very, very low. Worst time to invest is greed and valuation being very, very high. That is very, very simple. Again, very, very difficult to practice. So that is why asset allocation works. So actually, asset allocation is not needed if people know how to combat their emotions. Most people can't, and that is the learning. So March 2020 was the best time to invest. How many people invested? Very few. What are the schemes which invested? Balanced advantage and asset allocator fund of fund. So that's why it's the best time to, that's why these products became very, very good. And good time to redeem, as you know, is 2007 infra, 2015 pharma, 2017 small cap. These are all fantastic times to redeem. How many people did it? You ask yourself in your own customer base. You'll know what is the situation. I mean, in the last 6 months, I heard about one thing, SIP, SIP, and SIP. I think SIP is a great asset class. I think SIP is the best way to invest. Spend a lot of time thinking on SIP. My view is that once in a decade, you have to move accumulated SIP to products like balanced advantage, multi-asset, asset allocator fund of fund, passive multi-asset fund of fund, etc. Once a decade, you should move money from balanced advantage, multi-asset, passive multi-asset, or asset allocator fund of fund back to equity. When should you move that money back from balanced advantage fund, multi-asset fund kind of products into equity? It should be after a big negative global event. Like, for example, after World Trade Center bombing, or after Lehman failure, or after COVID. 3 opportunities came. In fact, 4, if you look at, was after Asian financial crisis in 97, 98. So every decade, there'll be one opportunity where you can take out money from asset allocation funds back to equity. After every big boom, 1994, 1999, 2007, 2017, take out money, accumulated SIP, and move it to asset allocation funds, like balanced advantage or asset allocator fund of fund or passive multi-asset or multi-asset fund. I think then you will have a good experience. Never close the SIP, continue with the SIP. Move the accumulated money once a decade. I think then you will have a phenomenal experience. So essentially, have the SIP always. Once a decade, move out. Once a decade, move in. Then I think you will have a phenomenal experience. How many people will do it? I don't know. If you don't do it, I think your experience in SIP will be good, but I think some people will close the SIP at the wrong time. That is my view. And then SIP will be fantastic, because just imagine in 2007, if you had taken out all the accumulated SIPs and moved to balanced advantage. At that time, there was no balanced advantage, but still. In 2008, after Lehman, moved all the BAF back to equity. Imagine what the experience would have been. Never close the SIP. Keep the SIP outstanding continuously. Then again in 2017, move the money from SIP, accumulated money to BAF. Then in 2020, after COVID, move the money back from BAF back to equity. SIPs continue. Imagine what the return would have been. It would have been outstanding. The investor of yours would have said, what an experience. So that's why my belief is once a decade, switching out will be useful. Once a decade, switching in will be useful. SIP should never close. This is the experience out of the mutual fund checklist that I have at this point of time. Just think about it. Market touched 60,000 quite some time back, about 18 months back. From that time till now, multi-asset gave 12. Asset allocator fund gave 6.8, equity and debt gave 6.5, BAF gave 6.2. And that is the reason why we believe this kind of an approach will work very, very well for investors. And every decade, there will be a negative experience. And when did we get this idea? In 2012, Warren Buffett came to India. So, we got the chance to attend a meeting where, along with 500 other people in Delhi. So people asked him, what did you learn from 50 years of investing? He said, once a decade, there'll be a bad event. In that bad event, how do you act is most important. He said, in that bad event, I invested aggressively. Nothing else matters, he said. So that's when we learned that once a decade, a bad event always happens. And you can't predict that event. No one needs to predict that event. You don't need to predict that event. When that bad event happens, you have to act. That's all. And that's what he told someone who asked him a question. He said, what's your learning from 50 years of investing? Investing in a bad event once a decade. Other times you enjoy. That's what he told the person who asked him. So where are we today? We are in a period where inflation is very high. We are in a period where printing press of New York or Washington and Brussels have closed. Printing press in Tokyo is running in a very, very big way. It will close, in my opinion, in the next 3 to 6 months. When that closes, all the printing presses would have closed. When all the printing presses closes, debt will become a great asset class. Right now, it is a great asset class. It will become an outstanding asset class. And that is the way it is. It will continue to be an outstanding asset class till the day one of them start printing money, two of them start printing money again. When will they start printing money again? I don't know. But till that point of time, it will be a great period for debt. And so debt adds to the entire basket of products that you did. Last 10 years, you sold hybrid. Next 10 years, sell debt. This does not mean that equity is a bad asset class or hybrid is a bad asset class. Just increase your product range. Equity, hybrid, debt. Do all three. That's all I believe in at this point of time. So it becomes absolutely great, and you can see the YTMs have just shot up. So today, all the YTMs of all the ICICI schemes are in the 8% range. And they may go up further, because today FD rates are also going up. So I think the YTMs of this will further go up. And as they go up, it will give you a much better situation. And that is where we are. Clearly, gold will also improve. Gold had shot up, now it's come down. Again, gold can also improve. But we don't believe in gold standalone. We believe in gold only through multi-asset. And that is why our approach for this year is safe. It is SIP, asset allocation, fixed income, and equity savings, equity arbitrage. And our products are, our main product has been multi-asset, because in one product you get everything at this point of time. What is the problem for India? Our problem for India is that Indian valuations are very high. So to sum up what I wanted to say at this point of time, if I just like to sum up what I wanted to say, there are a few things I just wanted to sum up as I end. Asset allocation is booking profits, so it is always a good idea. And in my opinion, SIP has to be acted once a decade on both sides. Accumulated SIPs have to be moved to asset allocation SIPs, and that what you move to asset allocation schemes have to also come back to equity. Index funds have no brains. In our company, we found last week that we have 2,700 crores in Nifty Next 50. Nifty Next 50 is the worst performing index in our entire system. And our belief is that you're in a business where you can contribute till the age, till you're well. Charlie Munger did an interview at the age of 99. Just go and see that interview. So you have a business where you can work as long as you are mentally alive. And that's the greatness of your business. So you have a phenomenal business with phenomenal longevity. So thank you all.